Every trader dreams of finding the perfect system, one that trades without emotion, never gets tired, never second-guesses, and prints money while you sleep. For decades, that dream has had a name, the Forex robot. But in today's AI-driven world, that dream has evolved. It's no longer about simple algorithms or pre-programmed strategies. It's about machine learning, predictive models, and artificial intelligence that claim to think like humans and trade better. Yet here's the uncomfortable truth. For every trader who believes they've found the ultimate AI edge, there are thousands discovering the darker side of automation. The illusion of control. The promise of consistency. The myth of the set-and-forget system. So let's pull back the curtain on the truth about Forex robots and AI trading systems, how they really work, why most fail, and what separates genuine innovation from clever marketing. It starts with a simple reality. Markets change faster than code. A Forex robot, also called an expert advisor or EA, is only as good as the logic it's built on. Most of them use technical indicators, mathematical models, or historical price patterns to decide when to buy or sell. They can process thousands of data points per second, but they don't understand the data. They simply react. When the market behaves as expected, they perform beautifully. Precision entries, mechanical exits, perfect backtests. But when volatility spikes, liquidity dries up, or a black swan event hits, their logic collapses. Because no matter how advanced the algorithm, it cannot predict chaos. And that's exactly where most traders get burned. They see a backtest showing 300% profit, plug it into MetaTrader, and assume the future will mirror the past. But it doesn't. It never does. Markets evolve, conditions shift, correlations break. And while the trader sleeps, the robot keeps executing the same logic, oblivious to a changing world. Then there's overfitting, the silent killer of algorithmic systems. That's when a strategy is tuned so perfectly to historical data that it performs brilliantly in the past, but catastrophically in real time. The robot wasn't learning, it was memorizing. Developers know this. That's why the internet is flooded with systems showing jaw-dropping backtests, but almost none showing verified live results. Because when those same robots face live data, slippage, and spreads, their edges evaporate. And what about so-called AI systems? Many claim to use machine learning, but in reality, most are just rebranded EAs with fancy buzzwords. True artificial intelligence requires adaptive modeling, deep datasets, and reinforcement learning, the kind that big institutions, hedge funds, and quant firms use with millions in research capital. Retail AI systems, by contrast, often work with limited historical data, lack context, and can't dynamically retrain fast enough to adapt to new market conditions. They're automated, yes, but intelligent. Not really. Now here's where it gets even more interesting. The very thing that makes automation attractive, the removal of emotion, can also become a trader's downfall. Because without emotion, there's no human oversight. No pause button when something feels wrong. No instinct to pull back during chaos. A robot will trade through a flash crash, a central bank intervention, or a geopolitical shock just as calmly as a quiet London session. It doesn't care about macro context. It doesn't read the news. It doesn't know when the Swiss National Bank unpegs the franc or when inflation data upends rate expectations. It just follows its script straight into oblivion. And yet, not all automation is a scam. There are legitimate uses for AI and algorithms in trading. Institutional quant funds use predictive models to analyze correlations, sentiment, and even satellite imagery. Machine learning can detect hidden patterns across asset classes that no human could ever spot. But those systems are built by teams of data scientists, not by one person selling a $99 robot on Telegram. For retail traders, automation works best as an assistant, not a replacement. A tool that helps you filter opportunities, test ideas, and enforce discipline, not one that promises to eliminate risk. Because here's the ultimate truth. Automation doesn't remove human error, it amplifies it. A bad strategy, when automated, fails faster. A reckless trader, when armed with leverage and an AI bot, can blow up an account in seconds. The traders who survive the automation revolution are the ones who use it wisely. They understand what their systems are doing, when to step in, and how to manage risk when conditions change. They treat AI like a co-pilot, not a god. So before you buy the next guaranteed profit robot or autonomous AI trading engine, ask yourself a few hard questions. Who built it? What's the logic behind it? Has it been tested live with verified audited results? And most importantly, can you explain how it makes decisions? Because if you can't, then you're not trading, you're gambling with code. And remember, if a robot could truly guarantee consistent profits, the people selling it wouldn't need to sell it at all. They'd be quietly compounding millions in the background. The future of trading isn't about removing humans, it's about upgrading them. Using AI not to replace intuition, but to refine it. Not to automate risk, but to measure it. Not to replace thinking, but to make thinking sharper. The traders who thrive in this new era won't be the ones with the flashiest bots, they'll be the ones who understand both the art and the algorithm. Because technology doesn't create edge. Understanding does. If you want to become the kind of trader who uses AI with intelligence, not dependency, then start by learning how markets really work, how data, psychology, and structure interact. Only then will AI become your advantage instead of your undoing. If you found this valuable, share it with someone who's chasing the next magic robot. Because sometimes the truth that saves your account is the one you didn't want to hear. Like, comment, and subscribe, and let's keep exposing the myths of modern trading together.